So first of all, good afternoon, everyone. On behalf of SFE and Burness Paull and Fintech Scotland, it's great to be able to connect with you all in a world which looks very different to the one that we put last SFE session. So I'm joined today by colleagues from Burness Paull and Fintech Scotland, and we wanted to use this session to the challenges and opportunities for financial technology businesses arising out of this awful crisis. There's a housekeeping slide there, so I think the plan today is that we will run the presentation. If folk can keep their lines on mute. If you've got particular questions, please feel free to submit them in the chat function. We're going to take some time at the end to answer those. And I'll just hand you over to Graham Jones in the first instance. Graham will be well known to you all. SFE fame, just to set the scene for us. Great, Graham, over to you.
Okay, thank you very much indeed, Callum, and can I say a very big thank you for so many members for joining this SFE combined event with Burness Paull. This is actually a board-themed event, so the SFE board is meeting weekly at the present moment in time due to the crisis, and this is the first of three key themed events which we're running. I'm sure it will not be the last of the three. It won't stop at three. But this is the very first one, so I'd like to say a huge thank you to Burness Paull, as ever, for hosting. It seems very, very strange not to be standing beside you eating a bacon roll and having a glass of orange juice with the backdrop of the castle behind me. But as Callum quite correctly said, we're living in extraordinary times. So very, very conscious. We have a stellar lineup in terms of speakers. So without any further ado, I'll pass you back to Callum, who will start the webinar. Callum, over to you.
Thank you very much, Graham, and welcome everybody. So there seems to be a consensus now among economists, banks and others that we are just at the beginning of a world-altering financial shock, not simply a recession. I've heard it described variously as a depression, a fracture and a tsunami. And the Bank of England's own webcast a couple of weeks ago, the bank anticipated a significantly sharper and deeper fall than the global financial crisis. However, on a more positive note, it said that the 2019 stress testing exercise on the major banks had shown that the UK financial system was resilient, and that even on the basis of the gloomiest predictions, the impact of the coronavirus crisis was well inside the stress test tolerances. In other words, our financial system in the UK is much better set up to deal with economic shock than was the case prior to the global financial crisis. If we act responsibly as national economies and government policy is progressive, said the bank, we can get back to pre-economic shock levels by 2023. In other words, on best guess at the moment, 3 years rather than 10 years with the GFC. And whilst that's reassuring to a degree, the most immediate concern of many businesses will be survival. At a macro level, the response by our UK and Scottish governments has generally been commended for being swift and comprehensive, particularly around the job pension scheme. But our experience with clients on the front line is that there are often issues in practice with some of the funding schemes, frustrations with the applications process, some gaps in criteria and eligibility, delays in funding coming through, and also challenges around the structure of those schemes. For example, the Future Fund impacting EIS eligibility. And I think this, combined with the scale of the crisis, will unfortunately see some firms go to the wall. But technology, including financial technology, will clearly be important and more important than ever in helping to rebuild our economy. There are some great opportunities for those financial services and fintech businesses who are nimble and able to weather the storm. In their joint roadmap to recovery document published last month, the European Commission and the European Council have identified digital as well as green and circular economies as key areas for and I'm quoting here, a Marshall Plan type investment effort to fuel the economy, fuel the recovery and modernise the economy. In particular, they say that Digital transformation will play a central and priority role in relaunching and modernising our economy. Investing in clean and digital technologies and capacities will help create jobs and growth and allow Europe to make the most of first mover advantage in the global race to recovery. And it will also help to make us more resilient and less dependent by diversifying key supply chains. And although we're not technically part of Europe anymore, the same principles will obviously apply to Scotland and to the UK. And Scotland and London already have a head start, well-established head start in fintech. I'm sure you'll all be familiar with the Bill Gates quotation about people generally overestimating the impact of technology in 2 years, but underestimating it in 10, and to ensure that you're not lulled into a false sense of security. That remains a truism, but world-altering, paradigm-shifting events have the ability to change the course of the normal rules, accelerating some technologies and reimagining others. Digital healthcare is an obvious example, so are e-commerce, warehousing, logistics, remote home working technologies, and the cloud, fibre and 5G infrastructures technologies that will underpin them. In a fintech world, tech which supports operational resilience and business continuity will be more important than ever before. Cash is difficult to access at the moment, not to mention being covered in germs. Even as we emerge out of lockdown, we may see an acceleration towards the cashless society in favour of alternate payment platforms. Those offering trust, choice and a positive customer experience will get traction like never before. We'll need, of course, to ensure that we're not leaving the vulnerable in society behind on that journey. There have also been some interesting developments in the world of cryptocurrencies. Leakage into regulated payment systems continues, along with regulatory challenges from financial regulators around the world. Facebook's Libra project has lost more than a number of key stakeholders. There are suspicions of market manipulation of Bitcoin value through the world's most traded cryptocurrency, Tether, which is linked to the US dollar. And Stephen and I both sit on the Scottish Government Crypto Working Group established by Kate Forbes, and that group is considering the findings of the UK Jurisdiction Task Force to determine whether Scotland will follow England in treating cryptocurrency as a form of property at law, which in turn starts to address challenges around transmission, transfer and security. And central banks in the US, UK and China are all exploring the issue of central bank digital currency CBDC in the next 5 years. Cybersecurity threats are emerging on an unprecedented scale, and opportunist bad actors are capitalising on the crisis. This makes the security and privacy by design an absolutely essential feature of any fintech platform, as well, of course, as being a legal obligation under GDPR and associated legislation. Those businesses that are able to build in trust and ethics and transparency and customer experience by design will be the true winners here. And data-driven insight through artificial intelligence and analytics is probably the key technological development that will continue to accelerate and run through everything that businesses do generally. We're speaking to clients at the moment using these systems in healthcare, in health and safety planning for new world workplaces, for example, in rota systems and office layout planning and so on. However, their potential use in fintech sphere is boundless, whether that's for visualizing financial activity, affordability analyses, financial profiling, fraud detection, automated trading, augmented advisors, financial product recommendation, managing regulation, and so on. We've worked with clients exploring all of those areas. And those businesses that can survive the current crisis and plan to harness these opportunities as we emerge into the light will be incredibly well placed to succeed. And on that hopefully positive note, I'm now going to hand you on to Stephen Ingledew first. Again, he'll be well known to you all. He's going to talk a bit more about how the Scottish ecosystem is responding to these challenges and opportunities. Stephen.
Callum, I think I'm going to go next, if that's okay. I think
my apologies, David. My apologies. It works so well in the 10 rehearsals we've done beforehand.
That's exactly it. So yeah, I just building from a lot of what Callum's saying on the technology side. I'm head of privacy at Burness Paull, and I want to look at some of the data privacy compliance considerations for businesses in the fintech sector, particularly coming out of lockdown. I think a lot has been said of the importance of trust and confidence in data and information over the last few days. However, the instinct that I want to talk about is the instinct to embrace and engender a culture of data compliance. It's clear to me that there is an imperative, but also a commercial incentive for all fintech businesses that process or interact with personal data to do so in a way that demonstrably protects, safeguards, and respects the user's data and information. Putting it another way, if you lose or you don't take the time to engender customer trust, confidence, and respect, then your business will either not fulfill its true potential or it may even be permanently damaged. As Callum was alluding to, throughout lockdown, we've heard loads of stories about data loss, data breach, cyber attacks, and data being misused for unlawful purposes, whether that be in the airline, finance, retail, or tech sectors, amongst others. And it's difficult to quantify the business impact of such loss of goodwill and trust, but their effects are real. And whilst the COVID crisis is likely to affect businesses and organisations for a considerable period of time to come, with the narrative now changing and lockdown rules beginning to be relaxed, consumers and businesses are now planning for the next phase. So GDPR, data privacy, cyber risks may not have been expressly mentioned in recent government briefings, but they are and do remain key risks for the sector. So I just want to spend a few minutes looking at some of the key risks and areas of concern for the sector coming out of lockdown. So let's look at what the ICO are saying. The ICO, the Information Commissioner's Office, that's the UK's data regulator, and it has indicated that it really is business as usual as far as they're concerned, albeit they recognise some of the unique challenges that businesses are facing. They've made it clear that their priorities are to protect the public interest, particularly vulnerable citizens, enabling responsible data sharing, where sharing is necessary, monitoring intrusive and disruptive technology, in other words, protecting privacy while enabling innovation. And there's often quite a difficult balance there that needs to be struck, as we're seeing a lot of the debate surrounding the rollout of the NHS Tracker app. So these priorities are likely to resonate with a number of fintech businesses involved in banking for good and the social impact of fintech on vulnerable citizens, open banking and data sharing, responsible sharing, and more disruptive data-rich technologies. So I think it's very much, these are the sorts of things fintechs need to be looking at. In the last 10 weeks or so, the majority of working population also working from home, and many likely to continue for an extended period of time, the increase of working from home arrangements has brought a variety of new GDPR, security, cyber risks and challenges for all businesses. And I think it's fair to say that due to the speed of change and the truly agile way in which financial services and fintech sectors have addressed the practical issues that they've faced, that some of these challenges or risks may not yet be fully known or fully understood, and therefore are not being adequately mitigated or managed to date. These risks and challenges will not go away and will continue into our new normality. So I would urge all businesses to spend some time to consider and carefully address these issues now. So by way of example, most, if not all, businesses will be using new systems, technology, WebEx, different platforms, engaging with new suppliers as part of their day-to-day operations. And a lot of these technologies and arrangements may have been onboarded at quite a pace as part of business resilience and continuity arrangements. So notwithstanding the speed of change, businesses still have a legal obligation to consider the overall impact from a data perspective of new systems and technology which they embrace. So 3 key questions that I wanted to make you aware of is, and you want to ask yourself is, do your new suppliers have access or the capability to access personal data, employees or customers' personal data? And if so, there's a legal requirement under GDPR to consider the privacy risks there. Have you undertaken adequate data privacy impact assessments when onboarding new systems and technologies? Again, data privacy impact assessments, we're going to hear a lot more about these, are a critical legal requirement, and they're quite often overlooked. And with these new ways of working, settings, systems and suppliers, do you really know where your data is held and who holds it, on what cloud, which country, etc.? So if you don't know the answers to these questions, I think now is the right time to conduct fresh data audits and revisit your records of processing. These are legal requirements after all. Another thing that's coming up quite a lot is looking at new ways of working, accessing systems, technology, etc. You might now want to take time to review your own policies and procedures. Are they still fit for purpose, for the new reality and the current ways of working? Or do they need to be updated so as to ensure your messaging to customers, employees, others reflect the situation and are transparent and clear? If not, then I think the fintechs would run the risk of sort of bad PR, loss of goodwill and trust, as well as maybe claims, enforcement actions, and potentially fines. And finally, with a lot of us now considering what the new norm looks like and perhaps moving back into the workplace testing is something that all businesses are considering and looking at. And there's been a lot of coverage about privacy concerns relating to the NHS COVID tracker app. How much data is being captured? How long will the data be kept for? For what purposes will it be used? Who has access to the data? And employers are also likely to face similar issues and questions from employees, where employers are looking to implement workplace testing, etc., particularly temperature testing, which we're hearing a lot about, maybe as part of a response to getting and creating safe working environments for staff. So testing and processing of personal and sensitive data in relation to employees also does raise some interesting questions and considerations. The ICO, the Information Commissioner's Office, has some really good guidance. So I would commend you to have a look at it. But it says data protection law does not prevent you from taking the necessary steps to keep your staff and public safe, but it does require you to be responsible with people's data and ensure it's handled with care. So the sorts of questions, 3 questions again, you might want to think about is, what's the purpose of the testing? What's the lawful basis you're relying on for processing data? What steps are you taking to ensure data collected is adequate, relevant, and is necessary? And quite importantly, who has access to the data and is it held securely? So compliance with data privacy regulations clearly may not have been at the top of a list of priorities for the majority of fintech businesses over the last 10 weeks or so, but that does not mean it should be ignored. All businesses and organizations ought to invest some time to consider, understand and address privacy issues and risks that are relevant to them so as to avoid potential breaches, claims, loss of goodwill, loss of trust that may follow. Customer and user trust and confidence in data processing practices and data sharing is really key to growing and developing business and customer footprint, regardless of where you sit within the fintech ecosystem. So with a few comments on privacy, I think I'm now handing over to Stephen to talk about some of the other issues.
Thank you, David. Thank you, Callum, for a really helpful overview. I'm just going to try and pull up some slides, if you bear with me. Hopefully you can all see that screen there. Is that all okay with you? I take that as a nod. I can't see any nods, but I'll take it as a nod, if I may. So, great sort of insights and perspectives there from Callum and David, and we just saw the opportunity here to share with you some examples how the fintech community and the fintech cluster in Scotland is responding to this environment we're now living in, and give an overview. And I'll invite my super colleague Nicola to join me as well in part of the presentation a bit later on. may I say, first of all, though, a big sort of thank you to the many people and organisations across Scotland that have really reached out to us over the last sort of 8-10 weeks or so in providing support into the community, but the broader cluster development and engagement. It really does act as a huge motivator from myself and the Fintech Scotland team's point of view, just to see how people go over and beyond really about checking in, but wanting to provide that support and key enablement that many enterprises need during this challenging time that we've all having to face. So a big sort of thank you, first of all, in that respect. So the Fintech community, this slide on the left-hand side of the community, it's over 130, when we left the office this morning, 134 firms now in the community across Scotland, very diverse set of firms, as you all know. Of course, as with the rest of the economy and small, medium enterprises, the challenges that the Fintech community face are no really different than all other aspects of the economy, in truth, around, of course, cash flow, challenges of working practices, risk management, contracts, supplier agreement, funding rounds, all those issues that other businesses, these businesses are facing as well and are faced, and have been really sort of challenging, particularly in that first 3 or 4 weeks as we acclimatise. What I can say, though, what we've really seen over this last 5-6 weeks is a growing recognition of the opportunities for the fintech firms in Scotland, how they're stepping up, and actually an acceleration of the digital and data innovation adoption of larger enterprises that are providing opportunities for new partnerships, new collaborations, and new propositions being developed across the spectrum. So whilst without doubt the challenges for the fintech community remain and continue, there is also an opportunity here to grasp as we go into a completely new paradigm in the way that society and the economy is going to operate. And those headlines you see there on the right-hand side, of course, don't just apply to the fintech community in Scotland, worldwide in terms of the impact, but that recognition is something that has become really paramount and recognised over this last few weeks. And that's something we're looking to embrace and adopt going forward across the board. And Karen and David highlighted some of those sort of points in some of their areas that they were going through. What we thought we'd just do, though, just very briefly, is just highlight some of the examples here in Scotland. And what you've got here is a set of this is not all the firms who have kind of responded in a way through their innovative approaches to financial technology, or slightly adapted in this new environment of COVID-19 and the challenges it gives rise to. The firms, some of these firms will be familiar to some of you. They fall into 3 types of ways in which they're innovating. On one hand, those who are looking really to directly support with other partners the consumers and citizens impacted by this move to a virtual world that we've been living in this last 10 weeks, whether it's firms such as Amicus, or whether it's in terms such as Castlight, now part of the Experian Group, in helping people with their affordability, or whether Direct ID, one of the organisations very much at the forefront of open banking and open finance in helping customers through their banking adapt to this digital world. So directly impacting people as they adopt into a new digital world, virtual world, and money management. The second group of fintechs you'll see in here, you'll be familiar names such as Float and Modular, BPay. These are enterprises helping the small, medium business communities adapt to a more digital and virtual world in terms of money management, and ensure that cash and the way that finances operate could be much more efficiently enabled and organised using new technologies. Whether it's through payments or whether it's through in terms of cash flow management or invoice management, these businesses are having a significant impact, not just here in Scotland, but across the UK and wider. The third group, there are some firms on here who are having an impact on the infrastructure that exists within large financial enterprises, but also enterprises in the broader economy and in the public sector. organisations such as Expand Access, APPI, Wallet Services, in terms of the way they're using technologies to be adaptive to this new environment, the way we're all looking to lead our lives, run businesses, and operate in the economy. And again, this partly reflects where fintech is not really a sector. These firms, because it's very much a movement, it works across all parts of the economy, not just the financial services side. So that's just a highlight, just some of the examples of some amazing work and some terrific entrepreneurs that exist in Scotland who are really embracing this opportunity in tough times and managing their teams to address some of these issues. And those of you who follow Fintech Scotland, you'll see some of the news that's been coming out over recent weeks about organisations such as Invest, particularly in helping, for example, citizens address the challenges around social benefits. So that's just some examples. The cluster as a whole, though, is responding with the fintech community. And here's just some examples we thought I'd just highlight and maybe take some questions afterwards around citizens, in the way that helping people, for example, in some of the issues around managing money and problem debt, or in terms of some of the financial strains that can give rise to mental challenges for people, really. So working with those organisations and the fintech to provide new solutions across government in the better delivery of services, working across sector. Some terrific initiatives, of course, you would have seen led by Scotland Is around the digital nation. And that's something I'd all encourage you, if you've not looked at, to very much take on board, that we're very much supporting with the team there at Scotland Is. David touched on the issues around security and the work here in terms of the whole resilience, but financial crime that we can see already is having a significant impact on people in this current environment, and our work there, working with FBRC and the other agencies. And not to mention the importance of actually our approach here is global, particularly working with our European partners, where we're part of a European collaboration of enterprises, where our cluster, working with clusters in Europe, can help develop multinational sort of opportunities around innovation. So that's just a snapshot about really how fintech innovation in Scotland is actually beyond the financial services sector, is going wider, and hence this cluster development in these very few examples I've just shared. But there's one particular theme that's really starting to emerge where Scotland is standing out, certainly around open finance and open banking. There's some exciting news in that being developed, certainly around the area of payments and also in the area of the capital markets. But one area as well that's starting to stand out for Scotland in terms of fintech innovation in this current environment is around regulation. And in that respect, I'd like to invite my colleague Nicola to say a few words.
Oh, thanks very much, Stephen, and thanks very much everyone for the opportunity to contribute to the discussion today, and Graham and Burness Paull in particular, thank you. And it's great to be here in a virtual setting nonetheless. So for those of you who don't know me, I'm Nicola Anderson, working with the Fintech Scotland team as the Strategic Development Director on secondment from the Financial Conduct Authority. And it's been a real pleasure over the last 18 months to have this opportunity to kind of work more connected into the fintech ecosystem here in Scotland and understand the evolution of that ecosystem. You'll be familiar, I'm sure, of the FCA's work generally in innovation and the creation of the Innovation Division that has evolved from Project Innovate in 2014 to a full division now within the FCA. And that division covers various activities and services, which include the regulatory sandbox, tech sprints, direct support, a specific team that are looking at the advice gap that we've seen develop across the UK, and then broader policy and engagement. And through that suite of activity, as well as the supervisory work and the broader horizon scanning, and the FCA has been quite vocal recently, in the last 18 months in particular, about areas where it would encourage innovation in particular. And we've called out some of those specific themes that the FCA is particularly interested in seeing innovation now. And they'll come as no surprise, I'm sure, and a real opportunity for Scotland as we think about that move to the greener economy and how we draw on the economies here in Scotland and think about the synergies across oil and gas and financial services in particular. We think about vulnerable customers and the issue of tackling financial crime, two really key issues that have become even more prominent in COVID-19. And I'll come on to the actions that the FCA is taking from the innovation space on that in a second. But Stephen touched there on the broader theme of RegTech, and the FCA and the Bank of England have both, been very, very vocal about the opportunity that technology produces to drive efficiency in regulation and encouraging that. And we're really privileged in Scotland to have a breadth of regulatory technology firms who are focused on various different aspects of this and that opportunity to progress and really think about how Scotland can develop competitive advantage in this space. And I've touched already on that point about addressing the advice gap. And again, we're seeing more innovation in Scotland thinking about that particular issue. The FCA has been very clear recently about its need to evolve its innovation services, and in the last few weeks in particular there's been a few announcements about the evolution of the sandbox in particular and the creation of data assets, which comes on to some of the points that David and Callum were talking about earlier. And we expect the sandbox to open again in the coming months, very, very quickly actually, towards the tail end of the summer, specifically inviting fintechs to innovate around, or others indeed, broader innovation around the subjects of vulnerable customers and the spike in fraud that we've seen that the FCA has seen connected to COVID-19. So it really places Scotland at a great spot, I think, to think about how we use fintech technology and our breadth of services and skills to help address some of these issues. I'm pausing there, and I think I'm handing over to Stuart.
Thank you very much. Hi there, I'm Stuart Murdoch. I am the head of financial services team here at Burness Paull. I was going to pick up, hopefully seamlessly from Nicola, on some regulatory points that are relevant to this topic, so particularly around COVID and fintechs. And so three quick kind of topics I was going to fly through. One was the FCA's response to the current crisis. The second was the key questions we are asked day to day from fintech clients about regulation. And the third one is keyword that was in this in the billing for this topic was opportunities. Big caveat on that, these are opportunities that I, as a consumer and as a lawyer advising some clients, have spotted. I did a similar little talk for Strathclyde University Fintech Society about opportunities. I said, I'm surprised we haven't seen this, I'm surprised we haven't seen that, and within about 2 seconds they all had apps on their phone showing me that these products already existed, which was slightly embarrassing. They were a bit more clued in than me on that, but so I suppose I'm going to broaden the opportunities to say not just ones that exist, but ones that actually have succeeded and permeated society, and actually we're seeing these solutions in our day-to-day lives, and the ones I'm going to mention I haven't, certainly. I'm sure you can all prove me wrong very shortly. Please add the comments to the box. So first one, FCA response to COVID. No surprise, FCA are saying for firms, generally speaking, it'll be business as usual. This is a time more than ever that consumer protection is required, and so the FCA's approach to regulation, its remit for regulation, isn't going to be give the firms some leeway, is going to be ensure that the protection's in place for consumers. There are a couple of dispensations which I'll talk about as well, but it would be odd if the messaging was don't worry so much about consumer protection at this time because I know it's hard for you. The answer is we know it's hard for you, but you've got to focus on consumer protection now more than ever in some ways. So a couple of bits of consumer protection that are in play are around personal finance. Consumers have got the opportunity to ask for payment freezes on credit card payments with no impact on credit files, mortgage holidays, ask for interest-free overdrafts from their providers, and finance providers have got to show forbearance in particularly in certain areas like motor finance and high-cost short-term credit. And certain enforcement action is currently suspended, particularly no repossessions until at least the 31st of October for homeowners. There's also a key work stream which the FCA are progressing, which you might have seen some press coverage on in relation to insurance and particularly business continuity coverage. I don't know how many of you on the phone have had that frantic scramble to check your own policies about whether or not there may be some payout available, and as usual, the answer is that there are a number of difficult exclusions and conditions and definitions in the clauses, and so the FCA are taking some legal action to try and seek some clarity on which policies ought to pay out in terms of business continuity coverage and which particular clauses, how they should be interpreted. In terms of non-consumer support, so support for firms, there are a few dispensations. So for example, for wealth, there is a current suspension of a 10% depreciation notice in a particular value of a fund that's invested. So that's particularly to reflect market volatility. If every time you have there's a 10% drop in a particular fund value, you could, portfolio value, you could be notifying them, twice a day, some days because of volatility. And for that, as long as there's notification every quarter, then there's no longer the requirement of the 10% temporarily. There's also a number of measures the FCA have announced in relation to firms generating share capital or increased share capital during this period. And as I already mentioned, there's the business interruption legal challenge. In terms of second chapter, key questions we are asked. We asked for a number of fintech companies at various stages of their evolution. But generally speaking, the questions are always the same. So the first question we always get asked is, do we as a firm need to be regulated? And we often get asked that question, my team get asked that question, and I think people expect an answer within maybe a sentence or at least a day. And the answer is, it's much more complicated than that. There's one example I can think of where we worked with them on several iterations of their development life cycle and basically gave them a different answer at each stage as the product developed towards market. And the answer is governed generally by the FCA's regulated activities order, but FCA supplements that with the perimeter guidance, which is over 800 pages of guidance, and even that's not by any way exhaustive in terms of whether or not a particular activity is regulated. And I was going to try and do a quick straw poll, but in terms of the advice we've given, but I think generally speaking, we're probably 60 to 70% of the time the answer is no in relation to fintech businesses. There is a workaround, there is a solution, there is a way to fall outside the regulatory perimeter entirely, and that's a really good thing to be looking at. I would say first in your development of your business, but certainly at an early stage, because regulation is necessarily a barrier to entry. It takes time, it takes effort, it takes capital to become regulated, and firms can be much more nimble if they have a key understanding of whether or not they actually are going to have to go through these hurdles, not only at the start, but also to ensure ongoing compliance. The second big question we're asked is, can I avoid being regulated? If the answer to the first question is yes, and again, the answer to that is yeah, there are some solutions. There's the appointed representative regime, which allows firms to be exempt from regulation by relying upon a principal firm which is already regulated. That's not a complete answer. You still go on the FCA register, but it doesn't take as much time and another firm. There's also the PSR agency arrangement and a few others. So there's a number of clients we've been able to help to start up with activity in their business in a timescale which has been much more commensurate with what they were hoping for. The third inevitable question we always get asked by fintechs is, okay, how long does it take to get regulated? And that's again a question which people expect there to be a very simple answer to. And there's not. I mean, there is a simple answer, which is, the FCA can take 6 months to process an application for to become regulated, but 12 months if there's inaccuracies in that application. There's a different answer, which is if you Google FCA KPIs and you look at the key performance indicators of the FCA, you can see not only how long does it take to get regulated, but also to vary permissions and a whole host of other key permissions activities that the FCA performs. Really useful document. Got it pinned up on my wall in the office. Didn't think to bring it home, but it's okay. We've still got Google, and that's great. But it tells a slightly different story. The real answer, of course, is how much time do you have to spend preparing your application before you submit it to the FCA? How much time and effort and knowledge and know-how does that take? And the answer to that is it can be an extremely difficult process, and very few fintechs that we speak to really have a true understanding of how onerous that's going to be. And I think another thing they don't really have a true understanding of is how much of that they're probably going to have to do themselves. I think a lot of them want to come to a compliance consultant or a lawyer for a one-stop shop and say, get me regulated. Oh, it takes 6 months, right? Okay, well, fine, I'll have to wait, but here's the fee. And the reality is that financial services regulation just doesn't work like that. It requires detailed projections and input from the management team of the business and a real deep understanding of that business to collaborate with external professional support to get through the process. The fourth question, and the last one, is how did I get in the FCA Sandbox? We get asked that by every single firm that kind of walks through the door, and our immediate response to that is always, well, why do you want to be in the sandbox? Is it really what you want, and is it really what you need? And sometimes that question is asked before they've even asked question one, which is, do I need to be regulated, or how long does it take to get regulated, or are there workarounds for full-scale authorization? And the answer we kind of get is pretty confused. Usually, it seems to be that there is a kudos attached to it, which grants a certain degree of marketability, publicity to firms that get into the sandbox, and that some firms don't have a true need or use for the sandbox, but they want to find a way to develop the product in that kind of public way. And so for many of them, we talk about alternatives to the sandbox, and particularly partnering with large firms and marketing and other ways to generate the publicity and the kudos that might otherwise be attached to the sandbox, or which is perhaps perceived to attach to successfully completing a stint in the sandbox. So just moving on to opportunities. If anyone's got any questions about any of those points, please let me know. But I suppose the key message I wanted to get from that chapter was it's really good to think about exactly how you're going to fit into the regulatory infrastructure at a very early stage. It's really important for both the fintechs and the firms they partner with to understand that. Just before I move on to that last chapter, a key example of that is we're recently acting for a company which did want to collaborate with a fintech, and the fintech had come up with a really brilliant product, absolutely excellent product, which was an alternative to high-cost short-term debt, much cheaper product, much safer product. Very happy with it, and they were of the view, and they'd taken extensive legal advice and consulted with the FCA for many, many months, that it didn't fall within the regulatory perimeter. And so our client thought, this is great, really happy with it, want to go with it, want to partner with this fintech. Let's see your advice. And the answer to that was, no, you can't see our advice. We're telling you we don't think it's regulated. You reach your own view on it. And, I understand why they did that, but it did severely impact the marketability of that product, because obviously the partner firm necessarily wants to get a contract signed up straight away. And instead, what they're asking us to do is do the hard work, give the opinion, do the consultation with the FCA that the fintech's already done, in order to get comfort that it's not a regulated activity, because if it was, that would have a significant regulatory risk for our client. And so, a bit of a lesson learned there, which is really to understand exactly how your firm's going to fit into the regulatory infrastructure, but your customers and your suppliers and everybody else that you partner with are going to need to understand that too. And then very briefly, just for a couple of minutes, as I say, my heavily caveated opportunities. So, there's a number of, as Stephen's already shown on his slide, amazing fintech, and everyone's pointed out, amazing fintech businesses in Scotland and beyond, and an amazing role for them to perform, I suppose the thing that I sometimes think about is, okay, but how much price competition are fintechs delivering, and where are there opportunities for greater price competition? And if there's going to be more price competition, we need greater price transparency, and particularly in some sectors, because you can't have price competition without price transparency. And so how are fintechs going to deliver this? Because if they can deliver that, there's going to be huge successes. And one key success I think about and think about how to move it to the next level is simply price comparison sites. You know, you can figure out who's the cheapest for insurance, and you can figure out who's the cheapest for a whole line of different products. But there's a whole bunch that just aren't there. And you think, well, you know, where's the work on this? And it's more complicated than just going on Money Supermarket for certain product types, certain subsectors. But I think that's got to be an area where there's huge opportunity. One key example, Nicola has already mentioned, is in relation to financial advice, and particularly the advice gap. How much does financial advice cost? How do you figure out how much financial advice costs? Is there a whole generation of people who are actually prevented from engaging in financial advice because they don't know how much it costs or how it works? This generation, I was recently told, are called Henrys, high earning, not rich yet. That's the next group of customers for financial advisors that have to target and who aren't getting access at the moment. At the moment, the one firm that I see targeting this group is Hargreaves Lansdown. They market on Instagram for financial advice, even though typically they're not actually a financial advice firm. They're a direct access platform, but they do offer financial advice. But there's limited price transparency there and limited price competition, and a whole host of new clients out there waiting to be picked up. I think the same applies to direct financial investments. How do you work out how much an investment costs, what the actual return is on it is going to be? How do you see all the investments that might be open to you as a consumer if you want to go yourself without an advisor? And there's a few other points that you start to think about arising out of this, basically sticky points in financial services that could be doing with being addressed. Another one which we've seen some progress with is choice for payments at point of sale, both for consumers and for businesses. I don't know about you all, but I started to see the kind of domination of Klarna, it's a Swedish bank, in relation to point of sale credit optionality. And actually after point of sale, it appears on your bank statement now as saying a particular purchase is eligible for credit post sale, which is quite impressive. And but it does make you wonder, when you're buying something, why there aren't every single firm that could provide you credit at that point of sale isn't available as an option through all from all business merchants, and why indeed the business merchant itself can't choose between all the different people who want to provide that payment option or credit to the customer. And just lastly, in terms of last two, I think there's another area that we're starting to see quite a lot of stickiness in, which is SIP providers and also suspended funds. Lots of legal cases ongoing at the moment about SIP liability. Lots of legal issues associated with funds that have had liquidity difficulties or been suspended or ultimately wound up. And those are areas of failure and problems in the market. And where there are problems, fintechs can provide solutions. They're nimble, they're innovative, they can provide fixes where traditional businesses haven't been able to succeed. You know, with suspended funds in particular, there's a big question of tracking the liquidity, getting the information out to the people invested in the funds so they have the opportunity to disinvest. There's issues of what's causing the liquidity difficulties. I mean, you know, we do an awful lot of work in relation to funds and advisors that have gone bust, and when you look through the files, the updates to the people that are invested are minimal. You know, that communication piece, if there's a solution for it which is implemented now, I've not seen it, and it's amazing. It's stark in how little information there is about SIPs, investments, funds that are starting to tail off and relying on very traditional forms of communication out to the ultimate investor. I'm going to stop there, leave a pretty tight 8 minutes, which only Graham Jones with his mastery of a Q&A could manage to make work in terms of allowing some questions.
Thank you very much indeed, Stuart. Thank you to all our fabulous presenters. So far, I've received one question. If you would like to ask a question, please, as Callum said, go into the chat box to leave your question. We probably have time for two, so I'll take the question just now from Callum, and then if somebody else would like to ask a question, if you just tap into the chat box, or even just speak out for those of you who feel more comfortable doing that. But I'll start with the first question, which is from Callum Sinclair. So Callum, would you like to ask the question to Stephen and Nicola? I think it's a cracking question as well.
Yeah, sure. Hopefully you can see that in the chat window there, Stephen and Nicola, but do you see us becoming a fully cashless society anytime soon? When do you estimate that will be, and how can we make sure we don't leave vulnerable customers behind?
Thanks. Do you want to go? Shall I go first?
Shall I go first?
Yeah. Two questions in there, isn't there? Let me do. I'll do the hard one. Nicola could do not leaving customers behind, because there's a lot of work going on there at the moment. So the cashless thing, I think going back to, was it David referred to the Bill Gates quote about, won't happen as quick, but will be far more. So it's not going to be quick moving to cashless society. It's just not going to happen for various sort of practical reasons. Albeit this current COVID-19 environment is obviously accelerating some of that digital money development, and we have, you point that, Callum, the cryptocurrency government working group, got some terrific businesses. Everyone should look at Zumo Money and their app that's just been launched. You can go on and have a play. Terrific example. If you haven't, just download it, just as an example of having a digital wallet. There's some others coming as well on that, but it's going to take a while in terms of adoption, particularly for those citizens and communities that have traditionally been excluded from good financial services. So in a way, how best do you get this right momentum to a digital financial world, but not leave behind? Nicola?
Yeah, I think that's absolutely right. So there's lots of talk, of course, Callum, you'll be aware, and others, there's lots of discussion on this, and it's front of mind in both the FCA and the Bank of England agenda at the moment. And there's a recent Insights article that the FCA have just published in March connected to this particular issue, and it talks about, absolutely that recognition that card payments have surpassed cash payments, and indeed COVID-19 has made that happen even more. But the general forecast is, around 2020, there will still be about 10% of people using cash. And we really have to think about the most vulnerable in society, and indeed the lower paid income, the lower paid segments of society are those who tend to use cash. So to Stephen's point, for us to move to a fully cashless society, it's those people that we need to be thinking about now, and how we innovate and include those individuals now, so that we build that trust and resilience and can think about how we take them with us on this journey. But until we do that, there'll always be, I think, that culture here to really think about broader inclusion.
I think one other thing, Karen, really on this is obviously what we've seen in the last 10 weeks. I think we've all got examples of how financial crime and effects have really gone through the roof. So I think there's a question, embracing a digital money world, but making sure, as Nicola touched on, this resilience, this security is in place. Otherwise, you're not going to buy in the trust. I'd rather make sure we've got the financial crime stability and foundations in place before running ahead with the digital money sort of propositions.
Thank you, Stephen. Thank you, Nicola. Can I just say a very BBC-esque handover there between yourself, Stephen, and Nicola? So I'll try and do my Fiona Bruce here and fit in, as it is at question time, fit in one last question over the next 3 minutes. And this question comes from Jamie Watts. So I'll read the question. It's to everybody on the panel. Is there a nervousness that businesses will start to reduce their spend on R&D given pressure on their cash flow? So that will be the question we end on. Another very, very strong question. Who will I start with? Maybe start with David, if you'd like to open, and then I'll hand to Callum and then over to Stephen.
Yeah, so, well, it's an interesting one. I think at a time when businesses have been innovating and are innovating throughout the current crisis, I think innovation in R&D is ever more important for the fintech sector going forward. So I get that there are pressures on cash flow and resources, but my solution to that is not to stop innovating, not to stop the R&D activity, which I think is really, really crucial and important for the growing development of fintech businesses and applications. So that's my tuppence worth.
That's great. Thank you, Callum.
Yeah, I'll just add to that by saying that, I think a lot of the clients we're working with at the moment have very much pushed through that phase of sort of immediate crisis management into what does the new world look like, and what's never coming back, where are the opportunities for accelerating existing propositions, and actually where are the entirely new opportunities or service lines that we might look at, and how do we then shape our business around about those, playing to our strengths. So I think the businesses that get that right will really bounce out of this crisis, and hopefully there's some sort of a silver lining there. Others who are perhaps not so agile and nimble, as I said in my opening remarks, will struggle.
That's fantastic. Thank you, Callum. And just in the final minute, Stephen.
Yeah, just 2 points briefly. Nicola and I at Fintech Scotland definitely seeing a realignment of budgets that was maybe spent on BAU innovation to much more disruptive innovation, i.e. fintech related. So that's very encouraging. The second thing is, and something Nick and I are very excited about, is how the government, Scottish Government, UK Government, Innovate UK will pump prime potentially innovation through R&D in the financial and technology sector going forward if we get the positioning and the outcomes right. So working with the universities, University of Edinburgh, University of Strathclyde and the others really is a real opportunity for enterprises to unlock some of that innovation funding that in a way hasn't been really used by the financial sector in the past, and embracing that as they start to pump prime really the opportunities ahead.
That's great, Stephen. Thank you very much indeed. As always in the tradition with our Burness Paull seminars, we have run out of time. For anybody who has a question they would like to raise, and I'm conscious we've only had a few minutes to do this. If you would like to drop myself a note or David Headley a note, I can then make sure your question goes to the expert panel here. All that remains for me to say is thank you very much indeed, Burness Paull, for hosting. To our guest speakers, Stephen and Nicola, you were fantastic as ever. And a very big thank you to our SFE members for joining and in so much strength. So thank you very much indeed. We should pick up on this again as the crisis progresses. But thank you very much indeed for joining, everyone. And cheerio for now. Bye.
Thanks, everyone. Bye-bye.
Thank you. Bye.
Bye.